Welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. And it's been a lackluster day for investors and the market in general. Despite largely positive cues from the market, if you look at the Nifty from global markets, of course, if you look at the Nifty and Sensex, they have been largely muted near the flat line, although we have given up some ground the past half an hour. But small caps, clearly in the broad market, they are the outperformers of the day, outperforming both their large cap as well as their mid cap peers. And lastly, the rupee is seeing a surprising fall. I mean, although it started off the day strengthening against the US dollar, but after that initial rally, we saw a lot of sell-off in that currency against the US dollar, despite the fact that the US dollar had weakened earlier in the morning as well as on Friday overnight. So clearly, some bit of very confusing action happening in the market, Santo, and maybe just bulls are taking a little bit of a breather after what has been a very great 10-15 days.
It's the brute power of money at this
Absolutely.
point in time, CJ, and that leads me to believe that probably market may resume its uptrend after this.
Oh, well, that's a good signal. If you are saying that, then it's a good signal.
No, it's a reverse wave. It's when the last bear has lost hope that.
Oh, come on, you're not that bad. I'm sure you're not the last bear in the market.
Probably the market may resume its uptrend after a while. It's largely a liquidity-driven rally at this point in time, and nobody's really talking about valuations, and everyone's hoping that buyers will come in at every level because India still looks better than most other economies. So that narrative, I think, more than anything else, will keep the momentum going for some more time at least. A quick check from the F&O market. We are seeing build-up of short positions in futures of Alchem, Astral and Sun TV. Astral and Sun TV both reported pretty disappointing set of numbers there. So did Alchem. We are seeing a short covering in futures of Dr. Lal Path Labs. Now, this is one stock again where there's been a lot of negativity built up. Well, the numbers were nothing great, but at the same time, it wasn't as weak as most people in the market seem to be anticipating, and probably that is leading to some bit of short covering of positions over there.
Well, thank you, Santo, for all those F&O cues, but let's now get to our stock picks, the stocks that were on our radar today.
AIA Engineering, the company reported its numbers just a short while back, and this company is into producing high chrome abrasive resistance castings. These castings are used in the cement mining and thermal power plant operations. Now, very strong numbers there, CJ. Just you need to at one glance at them.
I know. I was struggling to find chinks in that armor.
78% year-on-year increase in net profit, 50% year-on-year rise in revenues, and operating profit margins, operating profit rather, has gone almost doubled year-on-year. So pretty strong numbers there, and improvement in margin is almost 5.2 percentage points, which has been a consistent trend. Now, the company had been maintaining its margins all throughout, clearly indicating that it's among the few companies which have been able to command pricing power. This despite some concerns on whether some of its verticals will really fire, particularly mining, but the latest numbers show that those concerns may have been overdone. We don't have the exact details of the order book position at this point in time. It was around 700 crore in July, and at this point probably it would have only increased given the strong performance we've seen in the quarter. CJ.
Well, Santo, I said that I was struggling to find chinks in the armor, but I did not give up. And one thing that is, sort of eating at me at this point of time when you look at AIA Engineering, Santo, in the past 1 month actually, the stock has been underperforming the Nifty by quite a margin. While the stock is, I think, down about 1.5%. The Nifty in the meantime has risen about 6%. So clearly there has been a little bit of consolidation creeping into the stock after more than probably 40% of gains here, in the earlier phase of the year. So clearly, I think investors are indicating that maybe the valuations that the stock is commanding at this juncture have largely factored in the positive earnings outlook that the company has. And I think going ahead, probably it will require another quarter of such strong performance, better than estimate performance, for investors or analysts at least to upgrade their earnings or revise their earnings estimates for FY24, FY25 going ahead. So for me, I think probably the stock could consolidate a little bit, but that does not mean that you just throw away the earnings performance that the company has given. You can see that in the reaction today. Although the stock has underperformed the past 1 month, today the stock is up 4.5% after reacting to those excellent Q2 numbers.
Well, CJ, I'd come across a funny quote which said that business television debates are usually about two people with different time horizons speaking over each other.
Absolutely.
So in this case, you seem to have cherry picked this last 1 month's performance, ignoring the fact that for this year so far the stock has been a consistent performer.
True, absolutely. But I have to also debate. I have to also bring my voice to the show or else it will be all about you and it will be a Santo show and not a CJ show.
That's fair point.
My first stock on the radar today is Dr.Reddy's. Well, it's been a bad day for Dr.Reddy's and also some of the other peers of the company in the pharmaceutical space. Now, that is largely because of the fact that Walgreens, a pharmacy retailer in US, one of the biggest out there, is a giant in that space, has actually filed an antitrust lawsuit against 3-4 companies, which also includes, by the way, Natco Pharma. They have alleged that these 3-4 companies had colluded together to delay the launch of generic of Revlimid. Revlimid, of course, is an anti-cancer drug. It's a very popular drug, very expensive drug as well. And these companies were trying to delay the launch of generic drugs of the same, formula that could have probably brought down the cost of healthcare for a lot of people. And now the problem with this is that if Walgreens does end up winning this lawsuit, Santo, this would mean that suddenly you would start seeing more and more companies starting to launch, the generic of Revlimid. Now, let's not forget, for Dr.Reddy's, one of the reasons why the company could post almost 50% jump in its US revenues in the second quarter was largely Revlimid. It was largely driven by the launch of the generic of Revlimid in the US market earlier this year that had driven those earnings. Now, if there is competitive pressure in this generic drug in the US, that would mean that prices will have to come down. That will mean that the addressable opportunity or market size for Dr.Reddy's and of course peers like Cipla also will come down, and therefore all those earnings estimate which were expecting those $1 million sales to continue probably for at least another 3 to 4 quarters, that will have to be revised, and that is why you are seeing the sort of correction that you're seeing on Dr.Reddy's, down about 3.7% at this point of time, fell almost 4.5% at one point of time, during the day. And I think, Santo, with this, this almost seems like almost that last nail on the coffin for Dr.Reddy's, given the fact that its India business also has not been doing that great.
Well, see, at this point in time, there is not much clarity, I would say. Of course, there are concerns and rightly market is, those concerns are valid, considering that Revlimid was one of the major factors for a strong second quarter performance by Dr.Reddy's. But that said, there are plenty of other triggers as well. For one, the commentary during the second quarter from the company was pretty positive. One, it had said that the kind of price erosion that was being seen in US, now the intensity had somewhat plateaued during the last quarter, and this was likely to be the trend in the coming quarters also. And the company said that it was fairly comfortable with a 25% EBIT margin for the rest of the year. This apart, it's positive on its India business also. It expects to clock about double-digit revenue growth from its India business for FY23. In addition, the company is also divesting a lot of its non-core assets. So when you put all these together, yes, probably the lower than expected sales in Revlimid could be a slight bit of concern, but you have plenty of other triggers. It's not as if Revlimid is the only trigger. And also, all the analysts, at least most of the analysts which are positive on Dr.Reddy, had highlighted that probably Revlimid performance may not be as strong in all the quarters, but they're still nevertheless taken a positive view on the stock.
I think, Santo, this is a company that is largely in a transition phase. I think it reminds me of Sun Pharma probably between 2015 and 2018, where the company was undergoing a transformation, as in moving from generic drugs towards specialized generics and specialized products. And clearly Dr.Reddy is also, after struggling for many years now in the US, now they have adopted a global strategy where they're trying to diversify their geographical presence, especially focusing on emerging markets. So during transition, stock performance generally don't tend to follow, and I'm not surprised that a stock, barring that COVID rally of 2020, 2021, we have not really seen any sort of long-term performance from this stock for a very, very long time, and I will not be surprised that if this underperformance continues for at least a little while more, till we can see guaranteed performance again coming back once this transition is over for the company. So yeah, an interesting stock to watch out for. Clearly something that should always be on the radar of investors, given that fact that it has been one of the greatest wealth creators within the pharmaceutical space, probably after Cipla and Sun Pharma over the past 2 decades. So not to discount what the company is doing, but at this point of time, the going clearly might get tougher for the company.
Well, CJ, just you mentioned that word guaranteed. There is nothing like guaranteed anywhere, CJ. So one will have to take things as they come.
Absolutely. Well, Santo, next talk.
Well, Exide Industries, again, a decent set of second quarter numbers. In fact, the numbers were ahead of what most analysts had been estimating. JP Morgan and Motilal Oswal are among the brokerages which are positive on Exide Industries. JP Morgan has a price target of 240 rupees and Motilal Oswal 225 rupees. Now, the relief for Exide largely came in the form of lower raw material costs. Both prices of lead and crude oil showed some bit of stability during the second quarter, but that said, lead prices have once again started climbing. But according to Motilal Oswal, since they have their own captive lead smelter, probably rising lead prices should not be so much of a problem. Besides, CJ, the management commentary has been pretty positive, both for automotive batteries as well as the industrial segment. In fact, the industrial segment witnessed a sharp rebound during the second quarter. There is a substantial recovery there. The focus now is going to shift to lithium ion cells, and Exide already is making preparations for that. It's setting up a huge lithium ion cell plant for which construction has begun, and hopefully it should be commissioned over the next 24 months.
Well, Santo, I think this is one company that is now clearly on a revival path. If you look at the earnings performance, it's been very, very strong. The market has been rewarding it very well, and even on technical charts, I could not find any sort of weakness as far as the stock is concerned. Clearly, a lot of the indicators are now on an upswing, and I think this is probably one stock within the auto ancillary space that may continue to do well, at least in the short term.
But with that said, I would also like to add that this is one stock which has really tested the patience of investors.
I think there were legacy issues also with the company, with the ownership and whatnot. So I think those things phasing out hopefully slowly and steadily, the investors' focus can ultimately come back to what matters the most, and that is the earnings, right, Santo?
Yes.
Well, last stock on my radar today is from the tech space or internet tech space, and this is InfoEdge. Surprisingly strong numbers coming out from the company for the second quarter. It took the market by surprise, and you can clearly see that in the stock performance today. If you look at the revenues, they jumped about 47% on a year-on-year basis in second quarter. EBITDA surged about 66% on a year-on-year basis, with the recruitment vertical EBITDA also very, very strong, more than 50 to 60% growth there as well. More importantly, the company indicated that the IT job market, which is of course one of the major drivers of revenues for the recruitment side of the business or vertical of the company, that is also stabilizing after seeing a little bit of a drawdown in the early or the first half or H1 of 2022 because of probable cuts in hiring of a lot of IT companies. But that market is also stabilizing, and overall, the management sounded quite confident that they could end FY23 on a more positive note than they started FY23 and ended FY22 on. So I think this is probably one stock with depressed valuation. Santo, it has seen a lot of corrections since the highs of 2021, and there seems to be less to lose and more to gain for investors who might like to take a look at this stock.
Well, improvement in the quarterly performance, no doubt. Just only quibble is that for the second quarter in a row, you're seeing margins in single digits. Margins had been negative for a very long time, but prior to this 3 quarters, before the first quarter of this year, you had been seeing fairly consistent margins going as high as 15%. That now has suddenly dropped a bit. Secondly, InfoEdge largely talks about its job recruitment vertical, whereas it's got its real estate and Shadi as well, but you don't really hear much about that. Why is that so, Shriji?
I think, Santo, real estate, I think probably the action on that front probably has lukewarm a little bit probably after the first quarter, but I think generally real estate is still held well. Shadi is one platform that has been struggling because of higher competitive intensity. I think margins pressure there has been largely very, very strong, even though the entire market itself has been very strong. I mean, this being the record year for weddings in general for India. But I think there the competitive pressure being so strong has hurt margins, and the company had indicated a few quarters ago that they were looking to invest a little bit more on that platform to probably bring it on par with some of its more bigger rivals out there.
Well, last stock on a watch list this afternoon is Manappuram Finance. Now, stock has been among the big gainers this afternoon. However, this could largely be driven by short covering of positions more than anything else. Now, remember, gold loan companies in general have been hurting from the renewed interest shown by big banks in the gold loan segment. They've really stepped up the presence there, as a result of which gold loan companies are having to take a hit on their margins. Now, gold loan companies too have been coming out with teaser loans, some of which have ended, but previously it was felt that banks will never be able to breach that fort as far as gold loans go, but that's now not turning out to be the case. What has saved Manappuram Finance in this quarter largely has been the performance of its microfinance book. So, overall margins have improved by about close to 250 basis points, but at the same time it has also come at the cost of a slight degrowth in its loan book. There is a decline of about 6% according to CLSA. So, microfinance is one of the key triggers for Manappuram Finance at this point of time, but will it be good enough to make up for any slack in the gold loan segment? Well, that remains to be seen. CLSA has trimmed its EPS estimates for Manappuram Finance by 1 to 2% for between now and FY25, although it has raised its price target from 130 to 140 rupees.
Well, Santo, I think the earnings, while of course they look weak on face value, were largely okay-ish. I think because we have already seen quite a number of quarters of weak performance from Manappuram because of the higher competitive intensity. Although that being said, the yield on gold loans is looking to be bottoming out for the company and for the sector at large. It seems the non-banking gold loan companies are seeing some bit of hope of revival as far as the yields on gold loans are concerned. So that is at least a positive as far as Manappuram is concerned. But if you look at it from a technical point of view, the stock is looking quite attractive after being beaten down throughout the large part of 2022, Santo. I think if in recent sessions it has been forming higher highs and lower, higher lows and higher highs, of course, which is generally a very positive sign if you ask any technical chartists out there. And at this point of time, the view in the market is that the stock now needs to close above the 124 mark. It's sitting somewhere around the 115 level at this point of time. If it can close above that mark, then it could confirm the breakout and the next leg of the rally could start. But if it does not happen around that mark, we could start seeing some bit more of profit booking happening. So at this point of time, it's a tactical play at best. The long-term fundamentals of the industry at this point of time are not favorable as far as Manappuram and of course it's one of his peers, Muthoot Finance, is concerned. So play it tactically, don't go strategic at this point of time.
Well, and what are we keeping an eye out for, CJ? Now the earnings season is almost what? Over?
Yeah, I mean today will probably be the last earnings coming out from Nifty company. So market will largely react to ONGC's numbers tomorrow morning. But that said, one of the biggest economic data points coming in the evening would be the India retail inflation data for the month of October. Clearly a very important data point ahead of the monetary policy in early parts of December, of course. Apart from that, tomorrow morning, two critical data points coming out of China, the industrial production data for the month of October, as well as the retail sales data for the month of October. Now, it will be interesting to see what sort of numbers will come out, given the fact that they would probably be distorted a little bit by the COVID zero policy of China. So how the market interprets that remains to be seen. But these will be largely the three economic data points, I beg your pardon, that market will be looking out for, Santo.
Well, do we have any queries, CJ?
Not really, Santo. I think we can probably take a status check on the market before we leave the show. And it seems like we probably might have just turned into the green territory, have we?
Yes.
No, yeah, we are actually down about 0.1%. So we are almost at the same level where we started the show at. And if we can, bring up the charts for Nifty small cap as well, Nifty small cap and Nifty mid cap, I think the Nifty small cap index would probably be the only one in the green territory, is higher by about 0.5%, where the Nifty mid cap is just about on the flat line. So doing on the positive side, looks like it might also close on the positive side, but generally it's been a very tepid and a lackluster day.
Nifty Bank has been slightly under pressure today. In fact, banking sector in general has been seeing a fair bit of profit taking in the last few trading sessions.
Well, Santo,
and with that, it's a wrap. Thanks for watching, and do share your feedback. We'll be happy to answer any queries that you may have.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.